Trump's energy stocks will help you retire. This stock, Valero, is breaking out right now. It's at an important level where there's interest, but it's not overbought. They have partnerships with BlackRock, Chevron, and Southwest Airlines for respectively carbon capture, refining Chevron's oil from Venezuela, and then also supplying aviation fuel. This is one of the biggest refineries in the US, and right now, money is not in NVIDIA. NVIDIA is digesting, not going into Tesla. Tesla has not jumped up past its delivery numbers day or its earnings reaction day. It's still consolidating in a range. Money is going into, well, some healthcare stocks, but also oil and gas, set to be the transition fuel for data centers as we build out solar, and then the big one, nuclear. Right now, VLO is the stock to buy, in my opinion. Let's jump into a little breakdown.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
So these are these partnerships. This is not super related to the stock being that increasingly valuable right now, this partnership with BlackRock, but it is good that they have this massive carbon capture partnership. It does sort of ingratiate them with institutional investors, endowments, potential big time investors that really like that green angle, particularly if this is to be a company that does well under the next administration, who could be Democrat for sure. And then Chevron is able to supply Valero's U.S. refineries with about 50,000 barrels per day of Venezuelan oil. So they have that massive supplier, basically a client. And then Southwest Airlines, a direct client, where they can supply them fuel. And then additionally, I didn't mention it, but they are using this IT software from SAP, enterprise software company, which shows that they are modernizing to an extent. I don't think anyone associates SAP with the next frontier, but it is a good sign that even in sort of an older industry, they're definitely making strides to keep up. So there's some projects that are interesting. This carbon capture project is interesting, but in terms of right now, I don't think anyone is super excited about ethanol. I think they're super excited about natural gas and oil, which you need. So VLO having a solid reaction to earnings. It's up about 14% already, holding exceptionally since earnings. If we look at some other companies, sometimes the canary in the coal mine is these consumer companies like Netflix, which didn't do so hot. In that same breath as Spotify that just reported, not great reactions. But despite money not being in these consumer names, it's talked about NVIDIA just going sideways, AMD doing well, but the reaction to earnings not doing so well even after this OpenAI deal. So if the money's not flowing into these big companies, I mentioned Tesla as well, still holding but not breaking out like it looked like it might, where is it? Well, it's not in Bitcoin, that's for sure. If we look at the Bitcoin ETF, Bitcoin futures, MicroStrategy, all pretty ugly. MicroStrategy feeling the worst of it, given that they are diluting shareholders and buying Bitcoin with the shareholders' money, and Bitcoin's going down. That's not great for what is a leverage play on Bitcoin. So that brings us to oil and gas, VLO. And if we look at natural gas, the price is up. So it's likely to be the fuel of choice for data center companies, even as the crude oil price has not been super hot. If you look, though, crude oil is not very correlated. And I've mentioned this mid-June. You see that spike in crude. If we go to VLO, sure, there was a spike, but compared to the overall trend, it's really not related at all. So what we have to work off is the earnings. If we look at Chevron, the earnings reaction is holding up. It's fine. This is building out, a little more of a base than maybe it looked stronger here for sure. But instead of looking at these big, slow-moving names, I do think that companies that are moving a little faster, you can see how liquid they are too. If we look at Chevron down here, this is something like 10 million times 100 is over $1 billion a day, and Valero is more like in the 500 million range or less than that. It's just easier to get some gains in these faster moving companies. So this would be the level when around over this high right here, right around 180. Now, enough charts. You're probably sick of the charts. So a little more about kind of this company's earnings and what they're up to. Well, here is the refining earnings. They're closing a refinery. They have some, decreases in renewable diesel. But despite these little challenges, they do appear to be making moves. They've got a new CFO. They have a solid price target. Wells Fargo is one of the price targets that might be more believable. Not that they are all to be believed. But I think the most important thing right now has to be what led to this strong earnings reaction, which is the beat on earnings per share, solid revenue, close to expectations, estimates, and very high usage of their refinery. So almost using all of their available capacity, almost like a power plant, literally matching how much oil they get to how much they refine. So big margin as well. That's why VLO is interesting. If you like these ideas, hit that like button. If you want a free course on how to buy stocks before they go up, hit that subscribe. And if you want one-on-one help, head over to stockscommunity.com. You can try it out for $25.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.